You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around here, the Options Insider Radio Network. 13 programs, a baker's dozen on the old network, including hundreds of archived hours of volatility views. Where do you find all of that goodness? Well, a lot of different places, but you can always start at the mothership, the flagship, theoptionsinsider.com. Surf on over there, click on the Insider Radio Network tab, and pretty much you're off to the races from there. You can find any of the programs and download and stream till your heart's content. While you're on the site, make sure you click around a little bit, look at some of the articles. Got great education, analysis, unusual activity, tons of unusual activity up there, as well as breaking news from the options market and all the other fun stuff you've come to expect from us. And of course, you can also find our radio content pretty much anywhere else you find your finer podcast programs, including iTunes, Stitcher, AHA Mobile, etc., etc. And if all that, again, is too much for you, just grab our mobile app available for iOS, Android, even the Fire OS. No shortage of ways for you guys to download or stream the show. And of course, send us your questions, your comments, your feedback after you're done listening. We love to hear from you guys. Mr. Jared Woodard will be joining us a little bit late today. He's got some client hiccups he's got to deal with, but he'll be joining us in a little while. But meanwhile, we are joined by the Greasy Meatball himself, Mr. Mark Sebastian, joining us from an Uber in an undisclosed location. Mr. Greasy Meatball, welcome back to the program, sir.
It's good to be here, Mark. I'm always excited when I hear the words AHA Mobile, because that means it's time for volatility views.
Well, yeah, it means you can listen to it in the car you're in right now, because it's probably built into the dash unit of the car. So there you go.
It may. It's a lovely Chevy Malibu I'm in right now.
It seems like you're always in some sort of mobile transportation when we're talking. You're in a car, you're on a train, you're on something.
When you're kind of a big deal, such as myself, you end up in the back of a lot of cars.
Yes,
I'm just glad some days I have a feeling though I'll end up in a trunk somewhere. Unfortunately.
Yeah, that goes down a pretty dark road pretty quickly, so I would encourage you to move away from it as soon as possible. Speaking of moving away from things, we're going to move away from this and right into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, you know what time it is. It's time for the Volatility Review, the portion of the program where we break down the week that was from a volatility perspective. We actually have a couple of weeks behind us now. We were, of course, off for the holiday last Friday, but we're back recording this on Friday, April 10th. For all of you playing the home game, you listening probably on Monday or anytime there. And we welcome you guys at all times. A lot of you guys like to discover this program in iTunes or other platforms, and they go back and you dive into the archives, and we love that. Go for it. A lot of great comments, a lot of great discussions, a lot of great guests we've had on this program. So certainly, even if you're not in the immediate trading range of that episode, feel free to dive in. There's a lot of good stuff over there. And speaking of the week that was, it was an interesting one. Of course, like I mentioned, we're recording it today, April 10th on Friday. Most of the major indices up about 0.5 percentage point on the day. VIX cash coming off a wee bit again, hovering and just a little bit south of the 13 handle right now, to give you some frame of reference for where we're recording the show, what's happening right now today. But in the week that was, Mr. Sebastian, a lot of interesting things afoot out there. What in particular caught your eye from a volatility perspective?
I mean, it was we saw a just smushing of volatility. They really took a lot of risk out of the marketplace. It doesn't look like we've got anything pricing into earnings season. We don't have, now that we're kind of through Fed minutes, and that was kind of the precipice for everything to turn higher. From day one, we had that miserable report on Friday while the markets were closed. Over the weekend, futures were down 16 handles. We end up 20 because the Fed's not going to raise rates in June. I wonder where we've heard that before. And what happened was we just rally. It's been rally ho. We're up 40 points. The VIX is smushed. They're obliterating the May future as we speak. I know that. This happened today. We saw a customer come in and buy just under 95,000 of the April expiring this Wednesday, 13 puts for 10, and then the bulk for 11 cents, with the VIX right around 1288. So he's definitely playing. VIX is going to stay lower, and that there's a real chance that volatility continues to smush. Whether he ends up being right or not, I'll be interested to see. This is, I think, a different player than the guy that buys, a month out, buys a bunch of nickel put options. The guy that's been doing that, I think, has been hedging shorts. This guy appears to be playing a VIX futures convergence play. That's what I think this is, and he's playing it in some size.
Yeah, he's certainly doing it in some size. I was going to get into it in the VIX options, but let's get into it now because you're right. It is certainly the size trade of the week from a VIX options perspective. And this is a week where, the VIX has been averaging 300 to 400,000 contracts a day. You have someone coming in doing anywhere from a quarter to a third of that all in one trade, just lighten up these April 13 puts. And like you said, this is a very near-term play. You're trading for $0.10 You have about a week or so to go, not even. So this is an aggressive move. Actually, I remember the last time we've seen this much size in this near term of a contract in the VIX options. It certainly has been some time. And it's kind of a bit of a counterpoint. It seems like a lot of the other paper we've seen going up out there has kind of been on the filtering in to the May upside calls. The May 21s and 22s were pretty popular this week with buyers as well. Certainly not to this degree. They were more kind of scattershot throughout the week. But still, this is just one mega concentrated play. And you're right. It seems like our friend is perhaps a little bit different player than the ones we've seen coming in, including our friend who piled into about 50,000 of, the April 50s, which are also still open. I think, though, our friend who bought into those probably has a smile on his face because we know if someone comes and does size like that and a weird strike like that, chances are they're hedging something else, probably a very aggressive short OTC vol position, in which case he's probably smiling all the way to the bank right now.
Yeah, I mean, that guy, my guess is that guy was either hedging some sort of variance play. He might have been hedging an equity position, something like that. This guy, like I said, this put guy, I think he's doing a convergence play in size, and he's doing it for cheap and thinking, maybe this is where the VIX ends up, with a 12 handle. I mean, his risk reward, a low 12 handle, is pretty good. Now, one thing, April is traditionally the lowest average VIX month of any of the months, and it's the least likely to ever be in contango. So there's a lot of reasons to think that this guy might be right, beyond the fact that he's trading for some serious size.
Nice thing about this is we'll be able to see relatively soon. By next week's show, we'll certainly know if this guy was right or not. It's not some June or September play or something else that we have to worry about here. But yeah, a lot of interesting stuff cooking out there in the options. Like I mentioned, people still buying the upside these days. They're still, except for this one crazy guy, or not crazy size guy, I should say. A lot of the other tone seems to be to the upside in May calls in particular. Looking at what people were lighting up over the past few weeks here from a VIX options perspective, definitely seems to be our friend out there loading up in the April is by no means alone. The near-term contracts are just dominating the open interest, which is kind of interesting. May not really on the radar except for one strike. Look at the top strike is still the AAPL with nearly over 250,000 contracts open out there. Then the April 16 puts, so still seems aggressive now given the fact that we're hovering in the VIX levels with about a little over 200,000 open. And then the AAPL is 171,000. Got to go all the way down to number 4 for the any May strike on the board. That's the May 20 calls with about 150,000 contracts open, and the rest are all April with about 140 to 125,000 open, except for the number 6 spot, which are the June 20 calls. That's the longest term position we have right now open on the top 10 chart. So interesting. Everyone and their mother playing nothing but short term, short duration stuff out here. Looks like we have. Speaking of June, though, looks like we do have some size going up today. Mr. Sebastian out here in June VIX land, in particular the June 23 calls going up for substantial amounts of size. The June 20s as well. Looks like it might have been a ratio or a spread. Looks like we have a ton of volume going up out there. So that's pretty interesting. If all these prints are correct, we're seeing here about 362,000 of the June 23 calls, 84,000 of the June 20 calls going up today, and 181,000 of the June 17 calls all going up today as well in June. So that, if all these prints are right and there's no cancels in there, that pushes us well over the 1 million contract mark for today, which is unusual. VIX hasn't broken that in a long time. So to people, maybe our friend, let's say if he was selling the puts, he might be using it to finance some of this, but that certainly seems to be a different trade entirely in April.
Yeah, I think it's different trade entirely. The one thing about why May versus June may trade differently, there's really not a huge spread between May and June right now. If I was forced to buy a VIX contract, I think the June's a more attractive purchase personally. So maybe that's one of the reasons we're seeing all this activity in June. Is that we've got some guys that, one, are going to be worried about the Federal Reserve, right? May's kind of a dead period. I mean, there are still, I'm sure, people are like, oh no, June rate raise. And those people are maybe the other reason why we're seeing some of this volume in June. That's kind of my best guess.
Yeah, it seems like we were talking about how vol seems to be trickling off, but the options seem to be waking up today. It's been kind of a bit of a languishing period for the better part of the past few months, with certainly no days over 1 million anytime in recent memory, and now we're blowing through that today with a lot of that coming, not just that big over 100,000 print in April puts, but tons of contracts. Looks like about nearly over 500,000 contracts just in this one size June trade. I'll have to parse it a little bit. It just went up recently as we were doing the show, listeners, so I haven't had a chance to really dive into it with any gusto, but clearly all opening because there's not much open interest except for on the June 20s for all of these strikes, and certainly 362,000 contracts is going to be opening on just about whatever you're talking about. It'd be interesting to see. I'll have to get into the ratios, see if these are related and what our friend is doing, if he's doing some sort of weird ratio fly trade here, or if these are all just separate trades. But either way, June also lighting it up out there in good old VIX land. So interesting. That's actually good to see because we've been talking on the show of late about how products have kind of been languishing. Overall, the open interest is only about 5.66 million contracts. We're seeing about 10% of that going up in this one, if these all were all related, this one June options trade out here in VIX. So it might be interesting stuff for us to parse out here. But of course, talking about volatility, another product that is of interest from a vol perspective these days, certainly to a lot of our listeners, is out in the commodity landscape, in particular when it comes to oil land. Of course, the oil bulls were back out in force. Seems to be one of the first weeks in recent memory where the bulls have been able to at least establish some sort of foothold without having their legs just rudely cut out from under them. You seem like every time you see any sort of rally, the bears get back in and they cut it back out again. This week seems to be the bulls in charge, at least for the time being. We'll see how that continues to play out. And of course, as you might expect, most of the major volatility gauges out in crude land and the related ETF land kind of coming off a bit. We were talking on our last episode a few weeks ago about how most of those volatility products, in quotes, like the OIV and the OVX, were hovering in the 50s. They're both off that now in the mid 40 handle. So for most of them around the 44 to 45 range. Again, not unexpected as you're starting to see this protracted upside movement and vol coming off as a result. Mark, I know you look at a lot of different products out in oil land. You look at the big crude options as well as USO. What caught your eye out there from a vol perspective?
Well, I think we're finally starting to see some of the air come out of VIX itself, of oil volatility. I mean, that stuff's been so juiced for so long. It's like, at some point, it had to end. And, we've got all of those indexes starting to get away from 50 and back toward 40. So that's kind of interesting. And I think that's kind of the general direction we're going to head. Now, the other one that is interesting that I think is going to stay high and is maybe the new player is EVZ, and that's into the 12s. Now, EVZ is the volatility of options on USD versus Euro swap, basically on FX between those two. And, 12% may not sound a lot, but in currency land, a 12% volatility is like a 30-something volatility in VIX, and that's kind of what we're seeing right now.
Yeah, currency is not really a category we hit a lot on the show for the reason you just described. There's not really a lot of products out there exhibiting a ton of vol. Of course, until the last few months, we, of course, saw kind of the big Swiss franc debacle kick off and spark really a lot of currency vol across the board. The ripples of that are still being felt in a variety of products, and now it's being recognized in this product you're mentioning here as well. They're currency, yet another of the CBOE's growing myriad of different tangential related VIX indices. This one, of course, on the euro currency. Yeah, but who knows? Maybe, Mark, that's something we need to address on the show going forward. Maybe enough things are happening from a vol perspective out in currency land that we need to, in addition to crude, maybe take more frequent delves out into currency land. Would you be in favor of that, sir?
Yeah, I mean, certainly for now, because that's really where things are moving right now. So, yeah, I absolutely think that there's good reasons. Yeah, holy cow, that guy did buy a lot of June.
Yes,
I'm just looking at it right now.
You're just seeing it now. Yeah, it kind of leapt off the page at me, too, while I was scrolling through. I thought for a second something was misprinted. Because
I think it's got to be a 1x2. He's probably looking for a cheap way to hedge. The only problem is this guy's in some serious trouble if it overshoots. So if he's got a great hedge between 17 and 23, and a terrible hedge above 29.
Yeah, it could. You're right. It could just be the 17 by 23 and that 84,000 in the middle. That's got to be related, I would think.
You would think. If I look at time and sales, I'll see if those traded at the same time. But
you're right. It is so tempting to see.
May just be in response to that big 1x2.
I mean, it is so tempting to see 181 by 362. Oh, that's got to be a 1x2.
Yeah.
But then the 84,000 in the middle is kind of what threw me off as well. You're right. Yeah. That could be the person who helped facilitate some of this, just taking down something that I got to get some of this off.
Exactly.
Here's what this. I'm going to make it into a fly now or something along those lines. Some sort of middling weird ratio 3-legged spread.
What he probably did, since the guy who's not happy is the guy that's selling the 17s and buying the 23s. My guess is, he was looking to move some premium around and or catch some premium earlier. So who knows? But it may just be a totally separate trade. I definitely think that those two are connected, though.
Yeah, if I had which way I would want to lean on that 17, 23, 1x2, I definitely want to be a buyer of it versus a seller of that right
You'd
here.
Think.
I don't think of any. Think. I mean, not that I'm a huge VIX bull, but more so than I am wanting to blast out a ton of 17s.
Yeah, no kidding. And I would probably not want to be naked that spread, though. I would probably want to own some 30s or 35s against it in size.
So that guy probably who facilitated that, or that firm or firms, because it's a size trade, probably came in and said, let's split the difference for some risk. Let's pick up some of these in the middle, just in case we maybe were a little bit aggressive in facilitating this.
Indeed.
So that could probably be, you're right, unrelated paper, but still interesting stuff, listeners. Yeah, VIX coming alive today for the first. I had almost for a while kind of just given up on that VIX would get back to 1 million contracts anytime soon. It kind of just seemed like we're living in this 300 to 400,000 contracts a day if we're lucky, sometimes into the 2 and below range in terms of the product. So it just seemed like that was the environment we're in, but who knows? April put size, June call size, perhaps VIX is finally coming back to life here on the program, which would be good. Good for us selfishly from a content perspective. We like talking about things that are actually moving and or trading. Of course, speaking of things that are moving and or trading out here in the volatility and VIX land, we would not be talking about our old friend VXST, because despite all the big paper going up in the mother product, the mothership of VIX, VXST, once again pitching a shutout with 0 contracts open, 0 contracts trading, nothing.
Isn't that beautiful?
A trifecta of 0 across them. Not even one contract open. That's impressive. It almost takes work to do that. You're saying don't trade this thing. Yeah. So that you think a day like today, when so much is, particularly all those. I mean, that's interesting just to talk about it from that perspective. You have someone who chooses clearly to go in on the mothership VIX product for a less than weekly contract rather than utilize VXST in any capacity.
Yeah. Well, I know a lot of guys that like to trade it, but there's no liquidity. Can't get anything done. And that's going to be a problem until we get paper that's willing to take the other side. Because right now, one of the issues is there's lots of people that have an appetite to buy it. There's nobody that has an appetite to sell it, despite the ability to really get a lot of contango.
Can you imagine trying to put up 90 to 100,000 contracts in VXST?
In VXST, no, that would be a pain in the butt.
Maybe you can get 1,000. Maybe. There's not even any open right now. I'd be even dubious about that without moving things incredibly. That'd be something fun to watch, though. I'd pay to see that. I wouldn't pay to do it. That's a different beast.
Unbelievable.
Yeah, but crazy stuff afoot out here today. Like I said, Mr. Jared, a little bit late today. This is usually a point where we talk to him about international vol. But anything on your radar, Mark, from an international perspective that really kind of caught your eye?
The SIBO is really about to start listing the EEM, the cash settled version of EEM and EFA. And one thing I'm hearing, a little bird said the SIBO is likely to move their methodology that they run on VX EEM to rename it, VX MSCI, whatever, and VX the other one, and run them on the cash indexes as opposed to the EEM options and EFA options. So that's one little thing I'm hearing out in the international vol space. In terms of that, Europe's kind of settled down. If you look at V stocks, that's come off, and really worldwide, the only area that's really crazy is that weird Hong Kong, China arbitrage that Chinese people are doing.
Yeah, we're talking about that a little bit on the option block this week, listeners. If you haven't had a chance to check that out, I encourage you to go and download that as well. And you're right, it was just anything Hong Kong kind of quasi-Asian related seemed to just have a burst of realized vol out in that space to a substantial degree. These are products that don't really trade historically with a lot of volatility, so these movements coming in are noticeable and demonstrable. And I kind of said on that show, and I'll say it here as well, it kind of made me wish that almost exactly a year ago when everyone was talking about the big opening of China to listed options, they're going to add a bunch of new products, new listed options exchanges, is going to be kind of the big kickoff for really, really big listed options trading in China. They kind of punted that ball down the road to some indefinite point in the future. It kind of made me wish that happened, because imagine if you had a lot of great liquid products over there you could actually trade from an options perspective versus a lot of these, options on ADRs and all these other things that we're kind of slinging around down here, which get the job done but are nowhere near as ideal.
Yeah. I mean, exactly. I mean, so who knows? All I know is that there's a serious ARB going on and a lot of people trading it. So that's been kind of interesting. Other than that, bond yields, the one thing that's kind of interesting, I think, is if you look at bonds, yields are hitting a lower low and a lower high pretty consistently here. And I think we're cycling toward a 1.5% yield on the 10-year, which is just unbelievable. But think about this: we're not doing QE and rates are dropping. So that's why maybe there's no volatility in bonds, is that really there's so much demand for bonds. It's just killing volatility of the product.
Yeah, going back to talking about bonds and, of course, rates and what you were mentioning earlier, too, and its impact on volatility. It is somewhat odd. Like I said before, listeners, we are kind of drifting down into the 12 handle in VIX cash, and the futures are getting crushed out there, too. People loading up on near-term VIX downside, and a lot of interesting things going on from a vol perspective. It certainly seems as though, really, the Fed was the last thing keeping any ear in that vol balloon. And even then, it was a slight amount because everyone kind of knew, they had kind of already admitted they were going to punt, but it wasn't a done deal. Now it seems like it's kind of a done deal. So when the Fed was done this week, that kind of left any air. And you're right, there doesn't seem like anyone's really pricing in any sort of concern or even interest. I mean, we're getting into earnings season. Some things could happen. And VIX in this low of a range at the beginning of earnings season, it seems, I would almost say, a wee bit reckless.
Well, they've got, I think they've properly priced in the earnings drop. Oil's done selling off. I mean, where's the real risk? That's my question. Where's the real risk?
The Apple Watch, baby. It's going to blow the doors off everything, and it's just going to crush the market, and it's going to be a disaster. VIX at 35. You heard it here first.
The Apple Watch? Yeah. I just don't see it. I mean, I've been watching, CNBC and some of the other networks have had just these, it's been all Apple Watch all the time, all day. And it's making me want to vomit because I don't think it's a long-term success. And I think it'll be funny to be able to go back to all this pump coverage and see that, nobody's buying the Casio calculator watch still.
It must be nice when you just put out a product and the channel turns into an almost entire 24/7 promotional vehicle for your
exactly.
product.
I mean, I'm not CNBC. One of the things I like to joke is, they were as much responsible for the Facebook IPO plummet as I think any other culpable party.
Well, they talked every retail guy into flocking in, whatever ridiculous, or trying to support it at those crazy levels.
Yeah. Absolutely. They were in love with it. So that's just the way it is sometimes.
Crazy stuff. But we were talking earlier about international volatility. We have a couple of interesting listener questions, one of them along those lines. So maybe we'll dive into one of those right now and dive into some volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the Volatility Voicemail. This is indeed the portion of the program where you guys take the reins and you guys ask your questions, your comments, send them all to a variety of different places, as our friend at the top of the segment outlined there for you. And Mark, we're just talking about international vol, so I think it's interesting to we actually got an interesting question here. I don't think we've gotten so many different questions, so many different areas of different volatility. I don't think anyone's ever asked this before, which is kind of interesting. Very straightforward, but still interesting. This is from one of our international listeners, Rahul Tandulkar. I hope I'm pronouncing that right, Rahul. If I'm not, please forgive me. He writes, Sir, he gets points right away for being polite. Sir, can you please tell me a website where I can find implied and historical volatility for Indian stocks? And, it got me thinking, we use a lot of different platforms and programs here. I use LiveVol all the time. It's pretty much focused 100% on domestic for the most part. Other ones like iVolatility out there, I've used those, but I've never gone and done a search for Indian underlyings before. And I'm kind of curious, Mark, if you have any recommendations for our friend Rahul along those lines.
I have no idea. I'm not sure anybody's keeping. The only thing is, I believe SIBO has a VIX for the Nifty 50 that is out there, but that's about the only thing I know in terms of volatility. That's
kind of what I ended up telling him. I felt bad. I said, here's the usual outlets we use. and 90% of them are pretty much focused exclusively on the liquid domestic stuff. And that's why I kind of wanted to feature it on here. And maybe if Jared wraps up his client stuff, he can come in. Maybe he knows some weird esoteric system that neither Mark and I use that he could recommend. But yeah, Rahul, unfortunately, I mean, you could try the iVolatilities and others. I know the iVolatility has some of their ownership structure and some of their workers are from Europe and Eastern Europe in particular, and Russia. So they may have more international access in their database, international stuff. I would try probably starting there, but if you can't find it there, that's actually a good question. Maybe some of our listeners would be able to write in. I know that Mark, the product you mentioned, the SIBO India VIX, there is one of the few that actually does any volume or business outside of the U.S. So there is some interest in that, some analysis I've seen written up on that, and so there might be some data on that as a result. So maybe that's also could be a good backdoor pathway into finding some of this data. Go out there, search for India VIX and things like that, and that might also find you some obscure database or link that we don't use here on the program that could be suitable for your needs. So good question, Mr. Rahul. If you have anyone out there has an answer for our polite friend here, Rahul, by all means, hit us up and we'll let him know. Now from the more polite to the less polite, but still funny. This one comes from a listener who goes by the handle JDog. So he writes, so VXX is crap. We all know this. Are there any VIX ETFs that you guys like? He's, of course, referring to the VXX, the much maligned, including on this program, except by Jared, who defends it, ETF that is, of course, rebalanced on a regular basis and is unfortunately used by a lot of retail people to buy and hold, and they get demonstrably negatively impacted by that for all the reasons we've outlined before here on this program. So he wants to know, are there ones that we like? And Mark, we talked about Allegiant on here, of course, TVIX. We don't really like that one much either. There's, you get into the XIVs, and you name the flavor of VIX. You want beer, you want bull, you want beer ratio. There are ones out there for your taste. Which ones in particular? I know you're kind of a bit of partial to XIV. Is that probably one of your favorites?
Well, XIV is a short vol product.
Yes.
Yeah, I mean, that's fine. If it sounds like he's like kind of interested in finding a long vol approach.
Yeah, that's true. I didn't think you wanted just a VXL. I was thinking you just wanted the universe of VIX. But yeah, maybe long vol wouldn't be XIV.
Yeah,
right?
If you're just looking for long vol, the closest thing to a decent ETF, it's never actually had to reverse split, so that's how good it is XVZ. And that basically is long in size, the back end of the curve, and short in size, short in small amounts, the front end of the curve. So it's kind of like having two VXZs and short one VXX. And, that's allowed it to get a little bit of, not absolutely tank. So it does have some value. I think that the smarter and more thoughtful way, rather than just buying one of these ETFs, is to spend some time understanding when is the right time to buy VIX and VIX-like products, and use them strategically. And if you do that, if one does that, they're going to be in much better shape.
Since we're talking about VIX ETPs and ETFs, I had some interesting stuff here. I pulled from an interesting article about looking at XIV specifically, that the inverse daily ETN and its performance since inception. XIV has only been around since about 2010, the end of 2010. Since then, it's averaged about 35.1% annualized since inception. I think it might sound surprising at first, but you think about it over time, we have been in a prolonged bull market over that time frame. So being bearish volatility hasn't been the worst thing. They also, in this article, they kind of break down some interesting different bullet points here in terms of how this would have performed versus interesting enough, if you look at if you had a pure inverse kind of VIX product, how that would have performed versus the way XIV performs in its odd constructions, and a few other interesting notes, and maybe some elements of perhaps some positive drift in the construction of XIV. So even on days when perhaps the VIX product itself isn't moving the way you think it would work for XIV, that drift could work in your favor. And so if you invested here, I think it looks like if you invested, according to this chart, if you invested $10,000 in the inception of XIV, or since inception of XIV, you would have done fairly well over time, would have hit easily the 50,000 mark, not too long after. So not bad, of course, if you had done it and tracked it against some of this this hypothetical or theoretical product that tracked a pure inverse of VIX, as opposed to the kind of the, like I said, the weird construction that XIV uses, he would have actually almost lost the entirety of that just because of the way, VIX performs over time. Interesting article, I believe it was on Seeking Alpha. I don't go there as much for a lot of my analysis because for a lot of the reasons I've outlined in the show in the past. I don't really like how they vet a lot of their contributors, but this one seemed to have some interesting stuff. We'll put some links in the show notes. And again, so if you're looking at interesting ones, and if you're into the short side of the volatility space, then perhaps, particularly with this positive drift concept, it makes XIV perhaps a little bit interesting. Also, maybe gives you a little bit more wiggle room, on this product, so that if VIX isn't performing the way you need, a little bit of that drift could kick in, and about 20% of the days, you still might do all right given the long-term stat. Mark, you probably haven't seen this study. It's in our notes here, but it's interesting stuff. Got some interesting graphs. We'll try to include it for you guys who are following along on the old show itself. Interesting stuff. Let's wrap it up here. Speaking of, everyone's got apparently VIX ETFs and related things on the brain today. This is a corollary to that. This comes from Tom Snydon, and he writes, "Why can't I trade options on OVX?" This is kind of our frequent complaint, Mark, here on the program. OVX, of course, being the SIBO crude oil VIX, but actually on the USO, not on the big crude oil options. And it may surprise you, Tom, or maybe not, to know that you can trade options on OVX. It's just that no one does it. I'm looking today at the numbers. And open interest is actually about 2,300 contracts. That's more than I would have guessed. Today's volume, about 71 contracts. Average daily volume, about 175. So this is by no means a liquid product. And let's just say if you wanted to go out and express, I don't know, you were bullish on some USO vol here. You wanted to maybe get long the May 50s. So those are a little bit out of the money. May OVX trading right around the 44 level right now. Then those are 90 cents at 160. So 70 cents wide. And guess what? You come in the middle there around $1.20 or so for a bid or something like that. No one's going to fill you. So that's one of the odd things. I know, Mark, we kind of chatted about this before. Why do you think products like OVX that theoretically should do well, two great tastes that taste great together, should be a home run? Why do you think no one's really moving any options on this thing?
Maybe it has more to do with the fact that, is there a lot of oil variance that trades upstairs? I think one of the pieces that's undersold in VIX is that, there was a robust upstairs market that was trading variance. And they love having a listed product to move their risk around, and that's really what kind of created the initial volume in that product. Now, and kind of took off from there. Does that underlying market really exist upstairs? Are there a lot of people betting oil vol? No, they're all trading it in laddered futures or laddered options. Nobody really hedges oil volatility. Have you ever heard American Airlines or United be like, yeah, we engaged in a bunch of oil variance swaps? No. So I think that's part of the reason.
Yeah, you're lucky if anyone even hedges their crude exposure. We had a question on another show recently of what products do the airlines use to hedge their crude exposure, and the conversation got into the fact that it's alarming how few actually do. That's one of the reasons Southwest had that advantage for so long. They actually hedged. One of the few airlines that did. Which is amazing to me. That's another conversation for another day, but amazing to me. But you're right. That if they're not playing in those products, they're certainly not playing in an OVX or something along these lines. I'm actually kind of surprised. Does that surprise you too? There's 2,300 contracts of open interest in OVX. I'm not sure.
I did not know that.
That surprised the hell out of me. I thought it would be about a couple of hundred. But apparently, someone did a block somewhere. And it's all the April 55s. There's 1,300 of those open. So apparently that's the strike du jour, listeners. If you want to trade OVX, they're at a quarter right now. If you want to trade OVX, load up.
I think those were sold, not bought.
Probably. But right now I'm saying they're at a quarter. And no bids. So go get them while the getting's good. That's the only liquid strike out in OVX land. All right, good questions, everybody. I want to make sure you all get your love on the show. So if you write into us, make sure we'll send them in, and we'll make sure to get you featured here on the old program. Meanwhile, it's time for us to keep on rolling right on into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. As the name implies, this is the portion of the program where we pontificate wildly and indeed recklessly on the future of all things volatility. I think if you had asked Mark and I at the top of the show, we would have predicted perhaps a continued steady drift to the downside going to next week, particularly with our friend loading up on those near-term VIX. But all of this love for June has me pondering if perhaps something is not in the works sometime down the road. Certainly not in the next week, but still there is perhaps more interest in upside here in VIX land than initially, certainly than we've seen in some time. Size prints going up out there in VIX land. So, Mr. Sebastian, probably doesn't change your near-term forecast, but it might be worth pondering on the long term. But before I put words in your mouth, what is your near-term forecast? What are you thinking for the week to come from a vol perspective?
In the name of our former co-host, sold to you. They're just obliterating May futures, obliterating April. Why with the June activity, I think is probably related to somebody betting that we'll get a vol pop into that Federal Reserve meeting. That's probably where that plays. I think that through next week's expiration, we're going to be up. I think we'll probably see an all-time high on the S&P 500 next week, and maybe a run to 21.5.
Yeah, while you're talking, I was just reviewing this paper to see if any more contracts have gone up. We're still at this, it looks like 1 by 2 with this crazy chunk in the middle here, but of VIX June options. But yeah, you're right, crazy stuff. And I was, of course, being a little bit of hyperbole in there. I don't think this June paper is moving us anytime soon, but it is interesting to watch. I'm trying to think the last time we saw if it is indeed that 1 by 2, let alone anything nowhere near this sizable of a 1 by 2, but even this perhaps aggressive of a 1 by 2. Interesting stuff, certainly one to watch. And by the time we come back next week, listeners, we'll certainly have the outcome of those April VIX puts to watch as well. So maybe for the first time in a while, VIX options becoming a more interesting product to parse again, which is good for all of us here on the program, good for you guys listening at home as well. And unfortunately, that's all the time we have on this little bit of a truncated show here today. But before we go, as always, let me check in with my cohort here, my partner in crime, the devious and dastardly Mr. Greasy Meatball himself. What is coming down the pike in the land of the pit, sir?
Well, I just did a webinar on weekly options, and there was some really fascinating stuff. You can go to, if you want to watch the replay, you go to optionpit.com/weeklies, and there's also an offer for our next Saturday class, which is going to be on the 25th, and we're going to do 3 to 4 hours of discussions on how to make money trading weekly options. So I'm really looking forward to teaching that, and I'm telling you, this webinar I did, I was blowing people's minds. They were like, "Whoa!" So
blowing people's minds, eh? And it wasn't
exactly
with you weren't disrobing in the webinar, and they were just horrified along those lines.
No.
Okay, good to know.
Indeed.
And you guys, I know you're talking about getting the webinar store. Is that up and running on the site?
It should be done here in the next month.
There you go, listeners. If you want to go check out some of those archives of all the webinars Mark's always talking about, then check out the web store on the old optionpit.com site. Coming soon, and even though he couldn't join us today, I'll also throw in a plug for our friend, Mr. Jared Woodard, over there at BGC Partners. He got delayed by a client, and he was very upset about it. I assure you, listeners, will be back with us next week. And on behalf of Jared and Mr. Mark, and of course myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, and for bearing with us over our week vacation. Hey, we need some time off here, too. And we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or Facebook.com/The Options Insider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.